about building a big base shop, and then today he talked about having that conversation to encourage people to bring their friends the very first time back, right? People bringing people. The best definition I've heard of a big base shop, right, or formula is people bringing people and high personal standards. Tia, what does high personal standards mean?
You lead from the front and you
It
have,
mean-
sorry, no.
It means you write 10K, you write a lot of personal premium. So Sheila is, yes, like Tia's saying, leading from the front, right? If she can build a team of people that are bringing people and then her people adhere to her standard of writing a lot of business, right? That is how you are going to have a big base shop. So you can't have people bringing people with no standard or low personal standard. We see that. And then you don't want just someone that is personally producing and then they or nobody else is bringing anybody. So it's that combination. So for me, that was the easiest thing for me to understand. It's like, okay, I gotta have a culture, and by the way, that starts with these conversations. You learn, everything in Primerica is a conversation. You wanna get people licensed, you gotta memorize a very good conversation to have with people about getting licensed, and then your people are having that conversation with their recruits. You want to get people on appointments? Think about it. That's a conversation. This is why we get an appointment. This is what you say. This is what you're going to see. This is how it's going to go. Everything is a conversation. Why do we recruit? That's a conversation. So people bringing people, that he just gave you the conversation. You have to be having that conversation with every single person that you bring into business, and you got to teach that to the newest person as well. And then when people start bringing a lot of people, that you're going to have a huge inventory of new people that can join, that can get licensed, that can take you on appointments, that they themselves will become clients. Many times I do a meeting like this and people come to me after and they're like, hey, you know that 401k training? I have a 401k. My mom has a 401k. My dad has a 401k. My husband has a 401k. Today I'll go over cash value. Someone can come, right? This meeting is a little smaller today, right? But in the bigger meetings, there's always someone who needs something that we talk about. There's so many different ways you can benefit from people bringing people. They can become a referral source. They themselves can become a recruit. They themselves can become a client. They can know a client. They can refer someone to you that may want to join the business, right? That's how you are going to get the multiplication of the numbers working for you. So this is kind of what I live by. When things aren't going well, I'm like, what's going on? And then we have to strengthen the conversation in those areas, and we have to talk about it and get people talking about it. All right? So if you want to bring up this training here is one of my favorites in terms of talking about why cash value is just really why it doesn't work. It's a more sophisticated conversation about why cash value doesn't work, why it never works. Because I talk to a lot of smart people and I read smart people talking about cash value. And so I always try to imagine myself in real life and in pretend what I would say to combat people's more intelligent arguments on how they defend cash value and why they think that it's right, okay? So if you're studying for the test right now, then you know that there's two types of insurance. There's insurance that is temporary, which is term insurance. There's insurance that is permanent, which is whole life, cash value, universal life, variable life, and many other names that they have for it, right? We believe in term insurance. We don't believe in cash value in any scenario. There's no scenario. So what happens is if someone gives you an intelligent argument and then you come to your trainer Sheila and you're like, hey, trust me, I know cash value is bad. I mean, there are some times. No, there's no times.
Yes, oh
There's
my
no
God.
times. So what I think if I ever question cash value, and maybe it is legitimate sometimes, I didn't think, oh man, Primerica's wrong. I thought, there's still something I don't know. Let me go back to Shaq and bring this argument. Let me go back to Sheila, right? Let me go back to her and ask her, because this does sound good, but I know it's not. That's the mindset I have when I go to her and I ask her, right? Or really, you guys come to me or go to her or whatever, right? It's not that they're right, it's that you're just still not good enough and you need someone to explain to you why. So let's go through some of this right now, okay? We need insurance our whole life. This is one of the things. This is one of the things. Even Sheila has a recruit that, I don't know, I only saw her that one time in your meeting at your house the other day, and she was talking about how, she used to be a cash value salesperson, and she said, yeah, the only thing, I love Primerica, I love everything. She's been here one time, right? She's like, the only thing is that the term expires and then people have no insurance when they need it most. That whole thing of when you need it most, let's talk about that, okay? When do you need insurance most? When your kids are 40 or when your kids are 2? So we just kind of take things at face value, like, oh, when you need it most. Why? Because you're old? Guess what? Your dependents are old too.
Yeah.
There's something going on right now in like money talk and finance talk and accounting talk and financial advisor talk, where they're saying that the baby boomers, which is, the people like my parents right now, are, and I'm not saying I agree with this, is what people are saying, they're hoarding their assets right now, and their millennial kids, some of them are struggling, and they're hoarding their assets. They're not really big spenders, and they're waiting until they inevitably die, and then their kids get the money, and everyone's like, dude, the kids can't buy a house, they're working crappy jobs, they need your inheritance now. What are they going to do with it when they're 55 years old? It's the same thing with life insurance. The kids need the money when they're kids, when they're dependents. So this whole thing of like when you need it most, what are you talking about?
Yeah.
Life insurance is to replace income. That is the primary tool. Now, if you're using it for some other estate planning, whatever, that's not who we're talking about. And even then, there's better things, just like what Dave Ramsey says. There's better ways. Insurance is to protect your income. You are working because you have dependents. You can be your own dependent or you have other dependents. At some point, we reach an age of retirement, meaning we don't need to depend on a job and we have no one depending on us. So we don't need insurance our whole life because we assume that we will be self-insured by retirement age. This is one of the things that is a very simple diagram that I draw for people, right? I say, yeah, I'm going to give you a 30-year term, and one day it will expire. And I'll give you a $500,000 term insurance policy. Hey, do you ever want to retire? What does it take to retire? Do you know?
Money.
What'd you say? You're right.
Money.
Money! How long you been in this country?
1 year and a half.
1 year, and he knows in order to retire, it takes freaking money. Good job. Oh, my insurance, when I need it most. Okay. Do you ever want to retire? Yeah. What does it take to retire? Well, money. So, right. So you're implying that even if you have $0 right now, over the next 30 years, at some point, you are going to have X amount of dollars, and now you're self-insured. So right now, you have very little savings. That's why we're going to give you life insurance, because if not, your family's screwed. Now, we're going to help you save money. Once your savings meets and then exceeds the value of your life insurance, now you're self-insured. You don't need life insurance anymore because you're self-insured. You are going to pay that death benefit to your family with all the money that you save from retirement and investments and real estate. You know how much equity is in baby boomers' homes? The majority of homes are paid off. 70% of homes are paid off, Shaq. The ones that have a mortgage, 80% of them are below 4%. These people have tons of money, and 50% of the net worth in baby boomers is through the equity in their home. Someone's going to get the home. And because they've been paying property taxes, they actually get the home. There's no taxes on the sale of the home, apparently. Like you can inherit the home, there's no taxes. There's a lot of money out there, right? So we want to help people become self-insured by retirement age, and you have to remind the client, right? Mr. or Mrs. Client, I plan to be your advisor up until and through your retirement. There's the person I'm talking to today that's 40, but I want to talk to the you that's 65. At 65, what do you think your priorities are going to be? Is it going to be to leave your now 41-year-old kid, they're actually going to be older than you are right now, with a bunch of money? Or is it going to be you being able to stop working, you being able to retire, you being able to afford your health care costs? That's what your priorities are. Don't let them think that insurance is going to be such a big priority. It's not. It's your investments, your retirement, your situation, your financial situation, not what you're going to leave. But does that mean I'm saying never leave anything? Of course not. If I help you save $2 million, someone is going to get that when you die. Your spouse and your kids. People say it is, here's a myth, it's good to build equity inside of a policy. They like to use the word equity because they're constantly trying to make us feel like this is just like purchasing a home. Terrible, sometimes negative returns. I read in the comments what people say. So I'll watch like the video or the article, and then I'll read in the comments. People are like, oh, that's not how mine works. I've been yielding 6% on my policy. Right, but your aggregate total account value, I don't care if you think you're getting a 20% return. Somehow, that total number is less than what you put in for a very long time. Account value is not borrowed. Go back. Account value is not borrowed. It's not withdrawn. It's borrowed, right? So let me explain, Mr. Client. You have a $500,000 whole life policy. You have $50,000 of cash value. So you say, yeah, I want to take out, $40,000. Okay, fine. You borrow $40,000. If you die, now your family gets $460,000. Your loan reduces, you can't just say it. People don't understand. If you're like, yeah, loans reduce your death benefit, they don't get it. You have to draw it out. If you are doing Zoom appointments, you better have a way where you can draw and write stuff out. She uses Excel, Josh draws with a pen right on his iPad. You gotta be an artist in your appointments. I cannot do appointments without pen and paper. Even if I'm in front of them and I'm using an iPad. You got to show them, like, okay, you want the money? Guess what? Your family's going to pay it back. Let's go next. I took this is a cash value table from a good whole life policy. Meaning it's a mutual company, it pays extra dividends, blah, 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 right? Let's take a look at this. After 20 years, you've put in $200,000 because it's 10 grand a year. You put in $200,000, your cash value is $206. So now you've gotten a 0% return. So what they say is, yeah, no, it's a mutual company though, it can be a lot better than that. Okay, so you put in $200,000 after 20 years, the midpoint assumption is $250. Best case scenario, which never happens, you have $303. 20 years of investing, you put in $200, you have $300. Let's go next. Okay, what is the rate of return? You solve for the return. So I said, we start out with $1. For 20 years, we put in 10 grand a year. We end up with 303. My rate of return is 3.7. My best case scenario, most ambitious projection is 3.7. This is my analysis when I go through this stuff. That's why you guys know I always start with, hey, it's just numbers. You're a numbers guy, right? Of course you are, right? Let me show you the numbers. After you see these numbers, there's no way you're going to want this policy. That's how I frame it. That's how I set it up. Getting your money back. Where is is this money coming from? Are they just giving me extra money?
No.
I have 50,000 in cash value. It just like appeared in there because I found this miracle product.
Oh my God.
Everyone talks about how insurance companies screw everybody and everything, and everyone hates them. But there's this one product where somehow we got one over on them. Isn't that amazing? In every other situation, we hate insurance companies, but with cash value, that's the one way where the consumer gets one over on. It's so dumb. By definition, Sheila, what is cash value? It's excess premium charges, right? It's excess premium paid, meaning you overpaid the premium. The premium is not supposed to be that high. You're paying $1,000. That's a lot of excess premium. That's where the cash value comes from. The cost of your insurance is $100. You're paying $1,000. See, here's one of the things that I say, right? We all know this marker is $1. We all know. Now, if you are willingly paying $5 for this, you know it's worth $1, but you are paying $5. You can't say, oh, yes, they give me $4 back in the future. No, they're only giving you back what you overpaid. That's how this insurance works. Just like you know your car insurance is $100 a month. If they called you and they say, hey, we have a great deal for you, instead of sending 100, send us 1,000, and then in 20 years, if you don't get in an accident, we'll give you all that money back. You'd hang up on them. You wouldn't overpay your car insurance just so you could get some of your overpayment back. But somehow, with life insurance, they've convinced us that this is a good idea. And then last one, they say that cash value is owning versus renting. The cost of renting versus the cost of owning real estate is similar. Okay, what does that mean? So I live in a townhouse, and I have a very high interest rate because I bought at the peak of interest rates, okay? But let's say I have a normal interest rate. The cost for me to be in that home would probably be about $3,500 a month. Today, if I want to rent my townhouse, it's about $3,500 a month. So the rent and own is the same thing. So cash value in term is not like renting and owning, right? Because cash value is $1,000 and term is $100. You see? Now, if there was a situation, let's think about this. The home I'm in, my actual cost is $4,000 a month, right? Without taxes, it's $4,000 a month. Now, if someone said, dude, your neighbor, you can rent their house for $500 a month, I'd be like, get the hell out of this house, sell it. I am going to go live in my same house next door for $500, and then I can take that $3,500 and invest it somewhere because that's how much I'm saving. You see what I'm saying? So it's not like having term is not like renting, because everybody would rent if it was that much cheaper to rent than to own. And it actually did get like that. The articles started coming out, they may even be out right now, when mortgage rates started to approach 8%, they said right now is a good time to rent than to own. Right. But any time it's like the same or less, of course owning is better than renting if you're going to be in the house for 20, 30 years and all of that stuff. You guys with me?
Yeah.
So renting and owning is the same cost. Term versus whole is not the same cost. So it does make sense to buy the cheaper insurance so that you can invest the difference. All right, that's the last slide, right? So any other intelligent arguments or questions that they give, other than like living benefits and all that? That's a whole different argument. Go ahead.
You say your rebuttal to, but mine is not structured that way. Mine is structured different.
Yeah. So in 20 years, this is what I'm just telling you what I say. I've been here for 20 years. How come I've never seen one that has been structured properly? And I have clients that are doctors, lawyers, every profession that you can think of, IT people, business owners. I've never run into one. And I've never seen the people who say that you have to structure them properly, I've never seen the illustration even online. I've never with my own eyes seen that before, right? And here's the thing, Josh, is the funny thing is if there was one that was structured properly, I would be selling it because then I would make 10 times more money on a policy than what I'm making right now. I'm a fairly intelligent person. If there was a way to do a better job for the client and they win in every single way and I get paid 10 times more, you think that I'm that big of an idiot? I just want to sell the cheaper product where I make less? This is what I tell people. Like, that's like insulting to my, right?
Yeah,
It's
yeah.
crazy. If it was better and it paid me more, of course I'd be selling it. I'm not out here to make less money.
Yeah.
Okay, anything else?
So I have a really good friend that owns the mobile policy. She bought it ever since she was 18, and she really, really believed in it. And I've been trying to get her to sit down with me so we can go over the policy, but she's kind of refused. And she keeps saying that she knows people who actually, like her parents, that living and collecting money from the policy, from their whole life. And she's like, oh, this is just fine.
How much is she paying?
$200 a month, I think, $200.
Yeah.
So I don't.
Yeah. If you're so confident, let's just go over one statement. Let's just go over the policy. Because if you're right, I'm not going to tell you my opinion. I just want to read to you what's in the contract. That's it. That's all I want to do. Forget my opinion. We're just going to read the contract and we're going to see if you agree and if you're right. Maybe I'm wrong. Maybe I need to get educated. So let's take a look at it. Why are you scared to sit down with me? Right? How about this? We decide right now you are not going to become my client. Okay? So I'm letting you off the hook. But let's just educate each other.
Right.
Okay? I'm not going to ask you to buy it. Let's sit down and let's take a look at it. Anything else, Shaq?
I want to have one point of discussion real quick about the op meeting. You can stay up there, Ken. What's your opinion on this? You know, we're averaging about 20 people showing up at the meeting, maybe even more. I think last week we had 22. Thomas, what do you think? Is it like between 20 and 25?
Yep.
Which is a great number. I fully expect that number to grow. And I'm really asking, I'm not trying to make any inference or anything. What are we doing about dress code? And I'm asking, because I understand, I'm 44, I get it. You know, some people come in, Sheila, you'll bring some young kids from college, they're in joggers, and they're sharp people. So I'm you know, some people come in, what are we doing? Because I wanted to see, you know, and also people coming in late, right? I don't mind if they come 5-10 minutes. Obviously, I'm not doing the meeting. Usually it's Val or somebody else. I don't know how disrupted it is for people, but I do want to have some sort of structure in the meeting. And I do want to get younger people, right? I do want people between the ages of 20 and 30, you know, I want an emphasis on younger people. They do dress differently. What do you think?
I mean, at a very minimum, no shorts, and I think using the words business casual,
Yeah.
I think that implies enough. You know, like, it's not casual, it's not business casual to wear joggers or shorts or basketball.
Or Crocs?
Crocs.
I mean,
We used to say no jeans, no sneakers,
yeah.
you know.
But sneakers is, you know.
Yeah, but
right?
sneakers now everyone wears, including us, and yeah.
Yeah, but, if you're old and dressed down, you're not in the meeting. Okay, because they're gonna they ruin it. We see some people that are older in shorts and they're ruining the meeting. It's just like, that is a absolute sign that you're gonna disrupt this meeting.
I usually send a text and say, please dress business casual,
Well,
like doing the church. But-
Here's the thing, I mean this sincerely, like, the reason I said your name, you have guests, so, you know, if you don't have any guests, like, don't worry, this doesn't affect you, you know, like, Ramosi had a post about it, he's like, hey man, you know, if you don't want any problems, just don't ever start a business.
Right.
You know, it's like the same thing, don't have any guests, it's not gonna be a problem, but when you have guests, it happens, right? They come late, you want them in, they came, you know, that happens, I'm okay with it, I'm not saying this, and we'll always make exceptions, but I just wanted to know, like, if we're, you know, if we kinda wanna align here.
I think that, like, there's certain restaurants that strict dress code, here it is. We have a strict policy with timeliness as well, and there will be a 10-minute buffer. And is that too much to ask? No, great. End of phone call, every time.
Perfect. But I also want you to know, it doesn't happen that much. But if it does happen, I just, like Jen, she had somebody, come talk to me, or be prepared, you'll just have to meet with them. That's all. It doesn't happen a lot. But I think, as you get your friends, and if Val says, she has her 3 good friends out here and one's just dressed down, I want them in the meeting, just, don't take it personal, right? We kind of have to. But I'm also, if we want to, not be as strict and adhere to the dress code as much, I'm okay with that too. I just wanted to see where we're at. What's up?
I think you say no athletic wear, because people understand no athletic wear versus business casual. Because business casual is a line that most people still don't understand. What piece is business, what piece is casual. When you say athletic wear, we all know that's sneakers, that's sweatpants, so you eliminate that process.
Yeah, that's a good point.
People understand that they're not coming in here with sweatpants, hoodies, hats, sneakers. And then get them around the line of
Ross, no chains.
Or sunglasses, please.
Tuck it in. I don't want you getting robbed. Awesome job, Samir. That was a master class. Great stuff.
Yeah.
Do you get that a lot, by the way? Hey, mine is instructor like this. Do you get it? Because I get that all the time. I hear it all the time. They always say that. I think
Yeah.
that's probably the most relevant
Yeah, but
objection
if-
I personally get. Mine's not like that. Mine's not structured this way. And then they don't want to show. I don't want to show it to you.
No, but if they do
It
say
isn't like
that,
that, but you just want to keep it secret.
But if they do say that, I say, well, how soon would you want to know if it wasn't structured properly?
Yeah.
Right?
So this will be on YouTube, okay? That answer needs to be dissected, written out. That was probably the greatest, I was like, wow, that was really good. Because it's just a total mind F to the client. Right? So even if you don't get the policy, they're gonna feel stupid, which is my goal.
Stop.
Write this one down. I don't want your business, and I want you to feel dumb. But for real, go back and watch that on the YouTube, and someone spit that out. It was a really, really good answer. The way that he answered it, how he answered it, and for me personally, I get that the most. That's just me, when people are talking about it, when I hear field trainers out there, they get that the most. So,
Yeah.
Awesome job. All right, we're here on Saturday. Let's have a huge op meeting. We're actually here throughout the week. Hibachi on Saturday. Last week we qualified. Let's get a bunch of new people there. Team on 3, 1, 2, 3.